Welcome back, guys, to another Zero DTE video, and today Coach Ernie is going to be talking about the Zero DTE strategy, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to join the world's #1 Zero DTE trade destination. Enjoy, guys.
Let's first start with what our strategy is all about. And it's different from the way most people think of trading that are trying to find a set of actions that get to a goal, right? As if they can create a stepwise approach to making a profit. And I'm not saying that's entirely not true. I'm just saying that it's setting the expectations in the wrong place on how to make profit. First of all, we're living in a probabilistic world. We don't know when things are going to happen or how big, when they do happen, they're going to be. And setting out from the outset with this sort of deterministic way that you're going to make this much profit can be both good and bad. It can be good in that you're targeting something and you're getting to an end goal and you're trying to collect something that you think that you've found some edge. It's bad in that you're doing something that may be totally missing the mark and you may be missing the bigger picture. So our strategies are really very different than that. We're not really trying to affect a strategy that will go towards a particular target expecting it to be there. We don't know if it's going to be there and we don't know how big it is when it is there. What we're trying to do is lay the groundwork for being resilient and to stay in the market so that when it is there, we're there to accept it. It's a fundamentally different idea. I don't know if anybody has any questions on that, but as a tail risk trader, we're fundamentally setting up to not fail, which is a little bit different than fundamentally setting up to succeed. It doesn't mean that we're not after success, where what we're after is not failing so that we can stay in the game and preparing ourselves for an unknowable future and to be robust in coming into that future, regardless of what it brings, whether it's small tidal waves or a tsunami. We don't know. That is fundamentally what we're doing. And we're not looking to go and take a directed action in trying to make profit. What we're trying to do is receive whatever the market is going to give us. Now, there's a good amount that it gives us that is noise. And that's primarily what most traders are after, that noise. That's not what we're after. What we're after are those bigger moves that everybody else is missing. And so by taking that fundamentally different stance in the market, that's what we're attempting to do. You look at all of our strategies from the smallest time frame to the largest. They're all essentially designed around that same goal. And if you never really step back and look at it that way, now's the time to do that. So let's take our most shortest term strategy that most of you came in here first knowing, and that's what it attracts most people, and that's the Zero DTE strategy. So you're looking at that and you're thinking, okay, how are we deriving an edge? We're deriving an edge by trying to capture optionality and premium decay on the last day of expiration when it is at its fastest rate of decay. So in other words, we're getting the most decay of premium in the shortest period of time. That seems like an edge, and it is. But that's not entirely what we're doing. But it is an edge. And that's good. The other thing that you'll note in the strategy is that it's not a high win rate strategy. It's a relatively low win rate strategy where most people are looking for 70, 80, 90% win rate type of strategies. And they have to take enormous risk to capture a small, tiny reward. We're looking at something entirely the opposite way. We're taking a very tiny risk to win a particularly large reward. However, in a Zero DTE world, and as you look at all the strategies and then start going from the longest strategy down to the shortest strategy, as you get shorter and shorter in duration, the amount of noise that there is in the market becomes amplified. So it's very difficult to look at a Zero DTE strategy without seeing all of the noise that's happening and the market's going all over the place. Every day is kind of a shit show trying to figure out where the signal is and what I'm trying to get at. And so for that reason, we devise our strategy in such a way that we can take advantage of a lot of that noise. But ultimately, taking advantage of that noise isn't really taking advantage of what that primary edge is that I talked about, and that is collecting all that premium in that final day. In fact, most of the returns that we get in a Zero DTE strategy are outside the profit tent of the butterfly. So our primary strategy is to put an out-of-the-money butterfly, and so far out of the money that we take very little risk to potentially have a lot of reward. Now, if you look at the percentage of time that we actually get into the butterfly, you quickly realize that that's not like the main game. That's like the end goal, big part of the game, but it's not the main game. Most of the time, most of the profits that we take are outside of the strategy, and they're relatively small compared to that. But they're not insignificant. Compared to the risk that we take, those wins that we take outside of the profit tent will offset the losses. And so they combined with the losses end up giving us a wash. Now, that's one way to play this strategy. I'm going to suggest another way that we can play it. And by doing that, we're not really trying to make money off of those, what end up being the vast majority, or in terms of number, of our profitable returns. What we're really doing is we're trying to stay in the game. We're trying to live to fight another day. And you'll see as we go out into longer and longer term, that noise starts to decrease dramatically to the point where we don't even try to manage any profits or opportunities that are outside of the profitable part of our trade. And that's because of the abundance of noise. The relative noise to signal, I think, is the way to put it, of short-term versus long-term.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.